Good morning, everybody. I'm Lee Seiler with Seiler Wealth Management, and welcome to my video blog. And before I get started, I want to make sure everybody knows that 1 week from today, all right, 1 week from today, July 28th at 6:30 p.m., we'll be doing a webinar, Investing 101. So this is really a great fundamental presentation. If you have teenagers, young college kids, or if you're a novice investor yourself, it's really going to be the basics, but we'll have question and answer, and we can make it a little bit more for the astute investor if need be. So we are flexible, but it does start 6:30. You'll have a link on this posting as soon as it's posted. All you do is click on it, sign up. You'll get reminders letting you know when it is. But it's a week from today, 6:30 p.m., and you can do it from the comforts of your own home. And I thank you in advance for attending. Let's talk about the markets. We're kind of seeing it continue just inching higher. We're not seeing big rally days. We're not seeing big down days. Any down days are very mild. And again, yesterday we had the NASDAQ have a pretty good day, but the rest of the market kind of just inched higher. Leading the NASDAQ really were the biotechs. And as I told you several weeks ago, roll back the tape, biotechs are in a pretty good position right now. They don't care what goes on overseas. In the fourth quarter, typically they outperform. And here's why. There's a lot of pressure for drugs to get approved or to move up through their phase 1, phase 2, phase 3 clinical trials. And typically, the FDA is going to shut down sometime in December. So things are trying to get pushed through, approved, moved to the next level, all by December. So, it typically, you get a lot of action. You're seeing a lot of, you watch CNBC all day long, there's this biotech stock is trying to get through phase 2, this biotech stock is this, they're trying to get this approved. So there's a lot of action going on there. So I believe that will continue. And however, the warning is anything in the biotech area has high volatility. It's just the reason is because their earnings. Guess what? Their lack thereof. Most biotech companies don't have earnings, especially the ones that are R&D type companies. Sure, Gilead Sciences do, but the smaller biotech still in the R&D phase, they're not making any money. They're getting grants, they're raising money, they're doing public offerings to try and get these drugs so that eventually can be acquired, can be sold, something to the bigger drug companies. So really, it's all news driven. Biotech stocks, for the most part, are news driven. And the expectation is that one day these drugs can be blockbuster. That's why they trade at extreme. When I say high valuations, that doesn't do it justice. I mean, these are just off the chart valuations because it's on a hope and a prayer. And you know what? Some do make it, some do not. But the bottom line is, right now, as a group, they're looking pretty good. The technicals on the charts, they look pretty good. They want to move higher. Individually, I'm not one to go out and just pick and choose individual biotech stocks that have no earnings. Would I go out and buy Gilead? Sure. Would I go out and buy Biogen? Sure. They're making money. Okay, Amgen, considered a biotech. I consider it really a big drug stock. But, I'm not going to tell you to go out and say, hey, pick this one, pick that one, pick XYZ biotech. I'm not going to mention any names because I don't want anybody to jump on them. Buy them in a basket. Buy a fund, buy an ETF that owns 100 biotech stocks. Because generally, if you're in the right sector right now, and I think we are, the sector's moving higher, you're going to participate. All right, and you could subsector it out. You could say, hey, this one's for cancer drugs. This one's for whatever. There are so many different ways you can participate in biotechs, and just do some homework. If you have questions, you can call me outside of this video. I really don't want to give people a ton of ideas on that because biotechs do make me nervous. Okay, they do make me nervous because they can absolutely come out with some bad news, and you can see something gap down, and we've seen it recently. Gap down $20, $30. That's the way it happens. But the market's inching higher. And, I believe that we saw this start market rally after Brexit because, I think if we didn't have Brexit, we wouldn't have seen that 900-point drop, which is, for those of you that listen to my videos and took advantage of it, we did buying that day, and now it's paying off. I mean, everything we've bought is moving nicely to the upside. So it was one of those things where usually when there's an event-driven drop like that, it usually recovers fairly quickly. Now, the reason I think it's recovering fairly quickly is because this is earnings season. Companies are reporting, for the most part, better than expected earnings and revenue. And what's more, their guidance. That's really important. In fact, that's probably one of the most important because companies can go out and say, hey, we beat on the sales side, on the revenue side. We beat on the earnings side, but doesn't look so good going forward that next quarter. Stock's going to get pelted. So we're really seeing pretty good guidance, pretty good earnings, pretty good sales growth. And that's something we hadn't been seeing. And we were expecting a drop in earnings, 6-7%. I don't know where it's tracking right now. We'll know more in the next couple of weeks, but we are knee deep into earnings. And we've had the biggest faux pas, I think, the most publicized one was Netflix. Didn't have a good report. But coming up next week, part of the FANG stocks, Netflix, part of the FANG. Remember FANG, the acronym? Facebook, Amazon, Netflix, and Google, which is now Alphabet. I'll never call it Alphabet. But next week, you'll have Facebook report, you'll have Amazon report, you'll have Google report, and Apple will report next week. So next week for the tech sector is going to be huge. It's going to be huge. So let's keep up what's going on there. But for the most part, I think we're okay. Look, we're a little stretched right now. What I mean is we're overbought. I think that the market's a little ahead of itself. I put in some protection yesterday just to on some things and just to make sure that we're okay. But there are a lot of strategies you can use. I don't see that we're in a huge risk of a major correction right now. Certainly, can the markets pull back 1% or 2%? Absolutely. I would welcome that pullback because I think we're still moving forward. We're going to inch forward for a little bit. We may have a little time until after earnings season. Once all this good news, which we are seeing a decent amount of good news, goes away, there's not going to be really anything left except for the election. And that's a you-know-what show. So for now, we're okay. I think you still have to be cautious. I don't think you need to go full bore in stocks. Certainly, any new buys, I'd be extremely cautious. We're not really doing any new long positions in our portfolios. In fact, I'm looking for some exit points if I see an opportunity. So let's see what happens next week. If companies like Facebook, which has been acting extremely well lately and hit a new high yesterday, got hit over 122 yesterday, that's telling you that next week's earnings are probably going to be pretty good and they're likely going to beat the street expectation. However, then you have to go back. Is there a whisper number out there? That's usually you have your earnings estimate, then you have that whisper number that says that earnings estimate's really not that accurate. We believe it's going to be this. So if it doesn't meet expectations and guide higher, the stock will take a hit. It could go right back down to that 115, 116 range. Amazon's acting extremely well as well. Google rallying. So those three stocks are acting pretty well. Apple, I think, is a little bit of underperformance, but inching higher, but yet just tracking a little bit less than what the S&P 500 is on a daily basis. But it's trading over 100 today. It's good to see that triple-digit number on Apple. And again, Apple is no longer that hyper-growth company it used to be, but it's one solid company. And again, you have to look forward to the iPhone 7. So we'll know more about that next week. But I tend to think that Apple's going to probably come in line. I don't think they're going to knock the cover off the ball, but you know what? They've surprised me many times in the past, so we'll see. We'll see how it acts as we get closer. All right, listen, don't forget, Investing 101. That is next Thursday, 6:30. The link will be underneath this picture or this video. But I really appreciate everybody sharing my videos and joining me. I hope it's great information. I think it is. And if you want to talk about your portfolio, 401k rollovers, college funds, that's what we do. We have a whole financial planning firm, so we can help you there as well. If you're not happy with some performances on your IRAs or your other accounts, we have an SOS, which is second opinion service, no obligation. Let's talk about it. All you do is give me copies of your statements. We'll go over them and make sure that what you own is suitable for you on a risk basis and it meets your objectives. Everybody's objectives are different, okay? Hey, everybody have a great day and a fantastic weekend. I'm Lee Seiler, Seiler Wealth Management. I'll talk to you next week.